Good morning and welcome to the market forecast for Thursday, December the 3rd. I'm John Hoagland. Thanks for trusting me with your time. Always interesting things going on in the marketplaces. We're going to take a look at our markets. We're going to take a little look at the eco numbers. We're going to take a little look at the news. Want to mention to everybody there's a little bit of a change coming to the website at Top Step. Check it out around noontime today if you would like to check it out. We're all very excited about it. And it's going to be a new look for us. And we're again, looking forward to it. I want to thank everybody who attended the market therapy session last night with Dr. Menaker. Always a good time. You'll be able to catch those on our YouTube channel. There's a couple of them on there already. The one that we did yesterday will be up in a couple of weeks. 2 weeks from yesterday, we have the final market therapy of the year. So I'll look forward to seeing you there as well. Some good thoughts and ideas and questions yesterday from people that were able to attend. Always a good time. So as far as eco numbers this morning, the jobless claims numbers came out. Now, I got a little bit of a question. The initial jobless claims was considerably lower than they were expecting, which is good news. They were, as well as continuing jobless claims came out lower than expected. There were some revisions from last week's that were revised a little bit higher, but I think all in all, probably some pretty decent numbers. We're still waiting at 9 o'clock Central Time today for the ISM service index. And then, of course, Thursday at 9:30, the nat gas numbers due out. As far as other news is concerned, again, big day at Top Step. Check out the website around lunchtime. As far as the markets today, U.S. equities kind of mixed here before the jobs claims. And as we get closer to the regular trading hour open, new hopes for a compromise for a stimulus plan have resurfaced in the face of sometimes somewhat questionable economic data. Our equities really just kind of holding here at all-time highs, seemingly looking for new information. Perhaps that new information could come in the form of a headline risk today, something perhaps good news about the stimulus package. The dollar down at 31-month lows this morning, trading below 91. Interesting, of course. It's got our currencies a little bit buoyant here this morning, as well as we've been seeing gold coming off that low. We're going to take a look at those on the charts shortly. Are we going to get an OPEC decision today? It's been 4 days they've been bickering back and forth, hearing and seeing grumblings on Twitter that they may have an agreement, and they're talking about a slight increase in production for the first half of next year. So we will be keeping an eye out. There's always headline risks in these markets, so make sure that you are protecting yourself at all times. Use those stops. Make sure you like, share, comment, question, feedback, and heckling are always welcome. Subscribe to our YouTube channel. You can get notifications when we do go live. We talked about the dollar at 31-month lows. VIX now down below 21. So, volatility low, dollar low. It'll be an interesting rest of the week, interesting rest of the year, it looks like. Still a lot of uncertainties out there as far as coronavirus, the vaccines, a seemingly never-ending election season this year. So we've got a lot going on. We're going to take a look. I always want to say good morning to everybody. Charles, first one in the room, you win the prize. Danielle, guten Tag. Andre, I've been trying to read this. Codanati, Andrea Codanati. Welcome. Bodie Wildheart. Yes. Thanks for coming, and thank you, Danielle, for posting the link, whatever that means. Felix, good morning. Jane, Shane, good morning. Brian, Lacey says good morning back to you. She's looking at me sitting in the sun in the kitchen there. MSS Capital, good morning. You're not late to the party. Party's just getting started. the party, I always say that the party starts when I get there. So you are here, the party starts. Andrew, Murph, Vladislav, good morning. Jory, Caesar, Profetian, Tim, Rod, good morning. Danny Ireland. Oh, you're welcome. Yeah, the doctor is great, and you know that mindset of metaphors for screen trading versus pit trading. Good. I'm glad you found it useful. That's the whole point is is getting people closer to where they want to be, and that is successful and profitable. Gino, good morning. George, John Doherty, good to see you. The Dancing Bear is with us. Mike, good to see you. Missed a good doctor, scheduling conflict, but you'll be able to catch all of them on YouTube as soon as they're up. We have 2 of them up already, I think. The one that we did yesterday will be up in about a week or so, and then we've got the last one again for the year in 2 weeks. So, Guten Morgen, Dream Team Institutional. I'm really digging that book, Positive Intelligence. Big thank you. Good. It is a really good book. I found it really, really enlightening and helpful, and let me know when you have your saboteurs named. Troy, Keith, good morning. Esteban, Mike, big move in natural gas. Curious what the report brings. Just flattened my position. Well, yeah, we're going to have to wait a little while for that. Natural gas always seems to, if you'll pardon the pun, light up a little bit here as we get closer to the winter season here in the northern hemisphere, if you will. Rob T, good morning. James, good morning, everybody. Okay, without further ado, let's take a look at the charts and see what we're looking at here for us this morning. As always, starting with the daily in crude oil. Market's been waiting for new information. Got a little bit yesterday, some conflicting information between the API and the EIA. That's already been digested. Volume and open interest boosts indicate bets are being placed, perhaps about this OPEC decision. Very tight range, very tight weekly kickoff levels. We've taken a look below. We haven't really truly been able to accept below this rangy area. We've got an inside day and extended trading hours so far today. Taking a look at the 30-minute chart here, there's very little change to the perception of value for the past few days for a barrel of crude oil. We just opened. We're in range. We're in value. We don't have really any overnight inventory with which to help us look for early opportunities. So I'm going to, as usual, suggest patience. I'm a big fan of staying patient, waiting for the good opportunities. We never know when the good opportunities are going to be there, or if it is even a good opportunity. But look where we are sitting right now. We're sitting in the middle of value from yesterday. We're sitting central inside the overnight high and the overnight low, which line up relatively nicely with value high and value low from yesterday. So I'm thinking if I stay patient, if I just let the market tell me when it's a good opportunity, and by a good opportunity, I'm focusing more on risk management. If I can get a cheap trade in crude oil today, I might think about it. If news does come out and we break out of this weekly kickoff range that we're in, 44.50 on the low side, 46.30 on the upside, with the increase in open interest to 15,000 yesterday and holding some pretty decent volume, I'm kind of feeling like there's a bigger chance for a continuation outside once we've accept price outside of the weekly kickoff range than another move back outside and then back into it. So be watching very carefully at the overnight high and low for shorter time frame trades, bigger opportunities at weekly kickoff high and weekly kickoff low. The E-mini S&Ps seems to be just kind of stuck here at all-time highs. We did take out the all-time high that was in the overnight session two days ago in the regular trading hour session. We've just been holding here. We added 14,000 in open interest on an attempt to continue a move and a possible close above weekly kickoff high, which basically was the swing high back here that happened in the overnight. We're still wrestling with that area. We were not able to close above it. We closed just below it, 36.67 As a matter of fact, 3 ticks below that level. But remember, all these weekly kickoff levels, any level that you're looking at is more of a range than an absolute number. Everything we look at is considered more of a zone for an execution than a finite number for an execution. So rollover has begun. A week from today will be switch day. We'll be looking at volume next Thursday to see, when that volume is actually going to move over. Typically, it's the day after switch day. So probably next Thursday we'll still be in Dece. Next Friday we'll probably be in March. We'll be watching that and we'll be talking about it. And either one that you decide to trade on that Thursday is fine. It just takes a little time for that volume to move over. So, but remember, the market is in rollover. That changes the face of things a little bit. That 14,000 we added yesterday may be a little bit loaded because of rollover, which is on the horizon. Take a look at the 30-minute chart here. So unemployment numbers, stimulus, no real direction here. Here's our settlement price right just under that weekly kickoff, 36.68. Still wrestling with that area, unable to have a daily close above it. Really just kind of hanging in value, near the high of value, no real overnight inventory. What's that? What am I going to say when I say that? It tells me that there's probably going to be a patience factor in getting involved in this today. The market is in balance. It is not out of balance. So I need to look for areas where the market might change from balance to imbalance to look for my opportunities. Our overnight low, overnight high, obvious levels. 36.68, the weekly kickoff high, maybe somewhat pivotal today, but there's a caveat to that. If we're going long above and short below and we never leave this area, we're going to cut ourselves up. So in range, in value, at an important inflection level, there's a whole lot of things to think about here. And on top of that, think about rollover. A lot of old pit traders, scalpers in the pits used to take the 2 weeks of rollover off because they couldn't get a handle on how the market was going to react and how the market was going to act. So there is a change in the marketplace during rollover. Keep that in mind as well. Stay patient. Make the market tell you, hey, this is a good spot. And maybe it's only because it's a spot that I can limit the risk. But I don't want to go looking for trades in the crude oil. I don't want to go looking for trades in the equities today. It is, when you go looking for trades, you're probably going to find one, but it's probably not going to be the one you've been looking for. Those tend to show themselves to us. Stay patient today. Same thing in the NASDAQ here. Taking a look. Okay, one difference here. The NASDAQ has had 2 daily closes above the weekly kickoff high, which was just basically the previous all-time high. Again, we are coming into rollover. Keep that in mind. Also awaiting news for some sort of directional activity. We lost 700 in open interest yesterday. Volume, nothing impressive about volume. I'm going to again be suggesting that we're going to try and stay patient, even though it's in a little bit of a different situation than the S&Ps here. Okay, we've got two settlements just above weekly kickoff high. Remember, these are zones, not finite numbers. Very little range last night. Just basically holding the high of value. There may be an opportunity a little bit earlier in the NASDAQ if we can open with some sort of a gap and we can't close the gap. Maybe we're going to see our market move to the upside. If we can't open with the gap, I'm going to try and stay patient and again wait for opportunities to come to me, not go searching for opportunities. Be okay missing a trade. I know it's not fun. It's not what we're here to do, is stand and watch the market do something we thought it was going to. But as day traders, we have to be sensitive to price. We have to be sensitive to risk. Risk sensitive, think risk first on your trades. You get a cheap trade in these markets, those are the ones you're going to want to take. Those cheap trades tend to be in areas where the market is not going to spend a lot of time. You're not going to have a lot of opportunity at those levels. When everybody wants to trade it, I don't. When nobody wants to trade it, that's where I'm finding good opportunities. So be patient. Again, in the NASDAQ. Gold continuing its bounce off the bottom. We've left our 2-day island bottom down here. We talked 3 days ago, maybe it was even Monday. We talked about a V bottom here in gold. It doesn't hurt that the dollar is at 31 month lows, but the technical turnaround here with that 2-day island bottom is continuing to see the price move higher. We added another 5,000 in open interest yesterday. We're starting to come off a little bit in volume, so I'm going to again try and suggest you stay patient. Look for the market to give you an opportunity on pullbacks to get into this move. Don't be buying highs. We've got 3 straight days to the upside. There may be a little bit of a relief break here that may offer us that opportunity to buy this market on weakness. Open interest still up on the upswing. Volume again faltering. We do have this 1851 previous weekly kickoff level. It's kind of hard to see, but it's an old weekly kickoff level that I've left on here and may come into play today. On the way down, it rambled right through it. Don't know what's going to happen if we get up here. It just might be an opportunity for us to look for an execution. It was impactful at one point. It may be again. 30-minute chart. All right, so yeah, let's go with oh, wait. Okay, so we have opened with a gap. We're seeing continuation. We're seeing value continuing to move higher over time off these lows. We have a gap. We have been unable to close that gap relatively early, which again says we're going to be looking for opportunities to buy weakness in this market throughout the day today. Yesterday, we opened with a gap. We closed the gap, basically traded back to value, rejected value, and then moved higher through the better part of the session. Closed near its highs. This is all good news for continuation to the upside. What this market, I think, is telling us with open interest and volume and a little bit of momentum to the upside is this auction process is still healthy, but I think there's a little bit of risk of a little bit of profit taking, especially as we get closer to the end of the week. But I'm looking at those profit taking possibilities, a gap close, a move back down to point of control or settlement, which is 1830.20, one and the same. Basically, point of control is today the settlement price. Not all the time. It just today the settlement price just landed right on point of control. So we do get pullbacks. If we're looking at a market that we're thinking is in a healthy upside auction, we get an opportunity to buy it on a weakness. There's where the money is. Overnight longs, no gap close. We try and stay looking for continuation to the upside without that gap close. We do close the gap. There's opportunity to buy the market on weakness. The euro, boy, oh boy, when I said I think this market is healthy to the upside, I was pretty serious about that. Volume and open interest momentum all indicate a healthy auction to the upside. We're holding volume day over day. Another 3,700 in additional open interest on an up move yesterday. There's still money coming into this market to the upside. The weak dollar, hey, that doesn't hurt. But again, we don't want to get emotional and start buying highs here. We want to keep our heads straight and buy pullbacks. We want to buy weakness in this. Where might we find that today is another question. Say we had some longs that came back to settlement before the open. The market has opened, did not necessarily leave the opening range at the low of the regular trading hour session, but a very weak attempt to come back down and close this gap has me thinking, okay, I'm going to be looking for opportunities to buy weakness. If I'm not in this already, I don't want to fight this move to the upside. Where is a good area to buy a weakness? Well, that's yet to be determined. We're going to be watching volume. We're going to be watching volume, high volume nodes into low volume nodes. Those low volume nodes and high volume nodes can tend to create opportunity. Be careful if you're not already in this move to the upside. Again, don't fight it. Look for an opportunity to get into it on a pullback. Because in the longer picture, again, I believe that auction process in the euro is still healthy and still has room to grow. The Japanese yen really moving to the upside now. We've got the weak dollar kind of changed the market state yesterday. We were looking like we might see this market move to the downside, but the continual slide of the dollar, I think, has firmed up most of the other currencies, and the Japanese yen is certainly one of them. Volume has been unimpressive, really, on the downside move, and as we've been centrally located between weekly kickoff high and weekly kickoff low, we added 400 in open interest yesterday on an attempt to move the market lower. Not impressive. On lower volume, also not impressive. What does it mean for us today? Well, if we aren't already in, we may be, as somebody said in the chat, late to the party for this move to the upside. This 96.10 was a previous weekly kickoff level that gave us a little bit of a stutter step here this morning, but we're seeing volume coming into the upside. Again, this market is largely short time frame controlled. So what is this market looking for as far as terminus to the upside? Well, we've got this swing high here. We've got a naked point of control, a naked volume point of control right up in this area. So just the fact that this point of control, this swing high are so close, it just looks like it's going to be a tough spot. It looks like the market may actually target to get to there, but it looks like it's going to be a tough spot to get through. So if I'm holding longs there, I'm going to be probably lightening up near these swing highs. If I'm not holding longs, I don't want to buy the high. I don't want to fight this move to the downside. I'll look for an opportunity to buy weakness as the day goes on, unless there's some sort of headline news or major market state change that occurs today at some point. I like Christopher Todman's comment, market is the only thing when in balance is bad. Well, there's a couple of schools of thought to that, Christopher. If you hypothesize correctly that the market is in balance, it's probably going to be giving you some pretty solid extremes with which to fade. In other words, you're selling the highs and buying the lows and selling the highs and buying the lows and selling the highs and buying the lows. You can do that ad nauseum until it fails. Some of the best trading days I've had are days that I recognized were in balance and gave me that volleying activity from the high to the low, from the high to the low. It's all in correctly hypothesizing and recognizing that hypothesis may be true and trading to that hypothesis that gives you the opportunity even on range-bound days, or like we say, days that are in balance. So, all right, we got about 5 minutes before the equity open. It's Thursday. We got today, tomorrow, then it's the weekend. Let's finish the week up strong here. Be patient. Don't fight directional markets. Please, please don't fight directional markets. Be patient. Look for the opportunity to come to you. Don't go looking for trades. Let the trades come to you. When a market comes and you look at it and you say, "Wow, this looks like a pretty decent opportunity. The risk is low. The risk is cheap. I can only risk this much, and if it goes, I'm going to make that much." Little risk, big reward. Asymmetric opportunities. Go find them. Get out there. Trade well. Dan will be back with you for the market recap. I'm going to see if I can't join in the party this afternoon as well. And we'll look forward to seeing you tomorrow morning on the market forecast. Trade well. Get out there and profit. Have a great day.